Okay, it's September 11th, Friday, and the markets continue to be volatile, and for good reason. It does look like increasingly we put in a top at 12,439 on the NASDAQ 100. Again, that's the one I'm tracking in the final channel. It's the lead bubble, even a little racier than the NASDAQ, the tech index generally. And for subscribers, just the other day, I put out an update with a number of charts saying there's three scenarios here. Now, you know, I like to have two scenarios in the short term because the short term's never as solid and clear as the long term. And two scenarios going into one pretty soon. Well, I have to have three scenarios here because this is complex. But two of them are more similar. So we're at a really make or break point here. Scenario one was, since we had broken a little below the channel, although we recovered with a big bounce, still showed, oh, we shouldn't have broken that channel, even so briefly. So that was still likely, perhaps the most likely, but it would need to see a downturn pretty near term or that becomes less likely. So we did bounce back into the channel, but we had a strong pullback into late Thursday yesterday. And now we're back near the lows of 11,055 recently. And if we break that low today, then that could mean the key break that, okay, we are breaking down into scenario one. If we can bounce today and hold, and thus far the markets are up a little bit on the futures. I'm giving this before the markets open, so note that. Right now it looks like the NASDAQ 100 might open up 0.5% to 0.8% on a bounce. And then if it can't get above there, it's still not back quite to the bottom channel trend line yet. So it's not breaking back into the channel, but can't break back into the channel quick here. We could break here. If it holds and rallies again, then we're back to scenario two, which I was saying was very likely once we bounce back in the channel, but scenario two does not take us to a new high or to the top of the channel. It goes more sideways, rising mildly until we break down, somewhere between now and the election. And I still think before the election if that happens. Scenario three was we actually have a stronger break up to near the top of the channel again, which may not make a new high. You got to remember the 12,439 top was a 4% throw over rally. I mean, a typical throw over rally to a channel is 2%. So that was a big throw over for good reason. So I don't think we see a new high even on that, but those are the three scenarios. But very quickly, we could go down to one scenario. Hey, we're breaking down. And you know my targets, which I also showed in the update to subscribers, on the megaphone pattern for the S&P 500, which is the most clear on the extent of the next crash, would say at 3588 top on the S&P 500 could become 2100 in the next few months. I mean, by the election or just after the election, November, December. Yes, let's call it by the end of the year. That is really going to say this bubble's over. And that's going to be a big crash worth avoiding. So watch today. Today could be the pivotal day. We've broken the channel, but we bounced back up confidently, but we're back under the channel. And if we can't break back up into it soon, it means scenario one and we're going to crash. And even scenario two says, we got limited time on this bubble burst and we still see that 2100 target on the S&P 500. That's 41% or so down from the top. So that's going to be a bigger crash. And again, all of my presentations, I'm giving a lot of online presentations now, obviously, Australia and here. I just did one yesterday for an apartment conference. And people were just wowed that there could be opportunity in a downturn. And I want people to keep seeing that. This is the greatest opportunity. The sale of a lifetime is a better way on financial assets than the crash of a lifetime to look at this. So there are big opportunities ahead. You have to get out of the way. It's better to be safe than sorry here, especially if we make a new low today. I'd say below 11,000 is saying, okay, we may be going into this next crash. And that is going to end up taking us about halfway down from where the long-term crash into late 2022 will be down 84%, say on the Dow, 88 to 90% on the NASDAQ and tech stocks. And remember, ever since I made my bold forecast in the late 80s for the collapse of Japan, greatest boom in history, Dow of 10,000 by 2000, all that stuff, back in the late 80s, I was saying even back then that the low point for stocks and the end of the winter season for stocks would be late 2022. That is still my forecast. That is when we should hit a bottom, give or take, and then the economy and real estate hits a bottom after that. The economy may be early to mid 2023, real estate 2023, 24, on and on and on again. So again, things are getting tense. Stay alert, and you're going to be getting more updates than usual for subscribers. So stay tuned.